So one buy and one sell, and I think one should maintain that kind of a stance in a market which is, such choppy. So the first one is a buy on Cipla. I think that stock is looking somewhat resilient on the pharma front. Many of the pharma stocks, in fact, are looking resilient in the last few days, and I believe that when the markets get into a defensive mode, stocks from the pharma pack, they generally get more buying attention. So I would expect the stock to move up higher from current levels. Targets to be kept at 800 plus. Stop loss could be kept at 740 mark for Cipla. The second would be a sell on Hindustan Lever. Now it's interesting because the stock has broken below its 200-day moving average. There are some swing breakdowns as well, and swing support levels rather being breached for HUL on the daily chart. So I would expect the stock to go into a downward drift, more of a short-term correction. What I'm expecting from current levels, targets of 2050 and stop us at 2135.
Okay. Vikas Sethi is also with us. Let's take it across to him for his fundamental calls for the day. Vikas?
Yeah, good morning, Karunya. Good morning, Varun. Yeah, as far as my calls are concerned, they are long-term calls and they could be treated as wealth creation ideas. I would like to recommend two stocks, and both are mid-cap ideas from the cash market segment. The first stock is ESAB India. It's an MNC which is a world leader in welding automation and robotics. The company also manufactures PPE and accessories like helmets, gloves, clothing, eye protectors, etc. And these kind of products are in huge demand because of the environment which we are staying in today. This company caters to high growth industries like automotive, power generation, shipbuilding, civil construction, general fabrication. If you look at its fundamentals, they are rock solid. The company operates at an operating profit margin of around 13.9%. The company has a very high return ratios, like ROE would be around 21%, return on capital employed would be around 28%. It's a zero debt company, and if you look at the PAT of the last 3 years, they've grown at a CAGR of 38% over the last 3 years. Promoters holding is around 73%, and FIIs, DIs also hold around 15.5%. So I'm bullish on the stock from a long-term point of view. I would recommend the stock to be bought at the current levels of around 1320, and in the next 9 to 12 months, we could see levels of 1650 on the stock. The second stock which I would like to recommend is again a great company. The name of the stock is Carborundum Universal. It's a Murugappa Group company. It has a joint venture with Carborundum Company of the USA and Universal Grinding Wheel Company of the UK. This company manufactures abrasives, refractories, and industrial ceramics. This company also has tremendous growth potential. Fundamentals are pretty good. The company operates at a OPM of around 13%, good return ratios of around return on equity of around 14.5%. A zero debt company, again, strong PAT CAGR over the last 3 years. And the FIs and DIs are also holding around 41% in this company, and they've increased their stake in the last quarter. So everything points to a bullish view on the stock, and I would recommend the investors to be buying into the stock at the current levels of around 275. My targets in a year's time would be 375 rupees on the stock.